Hello, I'm Russell Poynton from Edison Group, and once again, it's great to have Topps Tiles with us to talk about their FY25 results, which were released yesterday. It's not often we get to have two chief executives. So first of all, we have Rob Parker, who's departing in the next week or so, and Alex Jensen, who's picking up the reins from Rob next week. Welcome, Rob and Alex. So Rob, great set of results, nice set of results to be leaving the group on. Looked very strong. What do you think are the highlights from the FY25 results?
Yeah, great. Thank you, Russell. It's great to be here for the final run out. I think, we had a really good step forward in terms of sales this year. Every part of our trading operations grew year on year, which is brilliant to see. And overall, on an adjusted basis, that was 6.8% growth. When we add in the CTD business that we acquired about 15 months ago, actually that boosted the overall growth to just about 17%, almost 18% actually in the round, and 296 million of sales for the group in total, which is two things really. One, it's a fourth record year of 5 for sales across the group, and it's now 40% of the way to our really clear goal of Mission 365, which is about delivering £365 million worth of sales, underpinned by an 8 to 10% net margin. So really good progress on a sales basis. Gross margin also stepped forward year on year by about 50 basis points for the group. Again, on an adjusted basis, that's obviously incredibly helpful in terms of driving bottom line performance. There was some cost inflation this year, or was some cost growth this year. A lot of that was driven by inflation, actually. But nevertheless, even including those extra costs, actually profit for the business on an adjusted basis was £9.2 million, which was 46% increase year on year, which, as you say, was great to see. Adjusted EPS increased as well, broadly in line with underlying profits, actually, so sort of 40+%. And that's allowed us to increase dividend by just over 20% year on year, which we'll obviously be proposing to our shareholders as part of the AGM. And then the balance sheet remains pretty robust as well. So net cash on the balance sheet, 7.4 million at year end. It's down slightly year on year by 1.3 million pounds, but still a really good net cash position for the group, and also supported by a 30 million pound RCF facility. So we've got good funds available to the group. We're well capitalised.
Yeah. So, I mean, looking at the divisions, they're all firing on all cylinders effectively. But I guess with the business we have spoken about, because it's your most recent acquisition, is CTD. So did you just want to give an update on that? Obviously, the CMA review itself was quite disruptive.
Yeah, absolutely. Yeah. So CTD has been tough this year, but we remain very much committed to the original strategic rationale, which was we wanted a player that could really participate in the larger sort of contractor space in the market, and also national house builder, where prior to the acquisition we had no representation at all. So the strategic rationale remains very much intact for CTD. I think it's a good home for the business, and I think the business can really deliver growth to the group over time. But in the year, you're right, so the CMA process definitely knocked us back in terms of progress we wanted to make. And the outcome of that was we needed to dispose of 4 stores. 3 of those have now been disposed of. The final one is sort of imminent. I expect that to happen, literally day by day, but certainly during the course of this quarter, that one will be done. And then we're completely finished with the CMA process at that stage, which will be great. We've been working really hard on integrating the business, and actually we've done a lot of the heavy lifting now. So the warehousing is all integrated into a group facility. The IT systems are all now integrated, so it now operates on sort of Topps Tiles core systems, actually, and that's making a lot of the processes around the CTD business much more straightforward to us as well. And we've been really busy with the performance improvement program, and I think we have actually delivered really good underlying improvements in the CTD business. In reality, we probably started further back than we wanted to, and as you said, we've been constrained by some of the things we could do, and it's taken us therefore sort of longer to get to those activities. But the base plan, I think, absolutely remains as it was. And FY25 on that basis does look quite tough. We have seen quite a material level of losses for the year. Some of it is one-off, some of it is related to CMO advice, some of it is related to trading. But the important thing is we've now got a really clear plan in place for the year ahead. In FY26 we've now started, and we are confident we can move the business into profit this year. And I'd love to see a really bright future for the business under the group's umbrella.
Okay, that's great to hear that CTD's the outlook is still good. So Alex, welcome.
Thank you.
So first of all, as it's your first time, I think it might be quite useful just for you to introduce yourself, talk about where you've come from, what you did there, and why you think that's applicable to Topps Tiles.
Well, Russell, I've got extensive international multi-site retail and B2B experience. Spent a long career at BP. I was most recently at National Express. I'm on the board of Inchcape. And my last job at BP was as CEO of the Mobility and Convenience division across 15 markets with 9,000 service stations, 3,500 shops and a material B2B business. And I do think the experience that I forged there is very relevant to TOPS. I've got experience in developing and executing growth strategies in a way that is very appropriate for TOPS and the next phase of growth at TOPS. So driving revenue through new extensions, category extensions, through customer loyalty and by winning B2B contracts. So that piece of my experience is very relevant to TOPS. But also I've got a 15-year background in digital and data. I was Chief Marketing Officer at BP, where we launched new customer loyalty programs, new customer-facing apps, and consumer and B2B websites. And I do think digital and data is one of the big opportunities in TOPS, and I'm looking forward to accelerating that agenda.
Okay. And you've come in 18 months into Rob's Mission 365 strategy, which is, as we've heard, is producing strong results already. So what do you think of your key priorities in the next year or so?
Well, 2026 is an incredibly important year in our delivery of the 365 mission and the next steps. I've got 4 key priorities, and the first is clearly to make CTD and Tile Warehouse profitable. That goes without saying. And we are making good progress on that. CTD on a like-for-like basis is making good progress. The second priority is to accelerate the digital and data agenda. We've got lots of good things ahead. We're launching our digital trading app. We are using CRM in a much more extensive way. So lots to come and much more to get after. That's my second priority. My third priority is to make sure that TOPS Tiles is a real destination of choice for any hard surface, and that's a 2.1 billion addressable market. So that's why it's important we've expanded our addressable market by extending into new categories that aren't just tiles, but luxury vinyl tiles, shower panels, and so on and so forth. And just making sure that TOPS Tiles is a destination of choice and driving that through real sales excellence, making sure the teams are actually selling, converting customers, increasing basket size and so on. That's a key priority for us. And fourthly, our trade strategy. We have a very comprehensive trade strategy that enables us to access every single type of trade customer in the market, whether it be commercial through Parkside or house building through CTD, or with Pro Tiler and TOPS accessing contractors and small sole traders. And our strategy is, I would say, dual-pronged. It's about making sure that property decision makers are inspired by our ranges, and that those that are actually doing the job, whether they're DIYers or trade, actually have the things they need to complete the project. And I think the breadth and scale of TOPS really enables us to win in trade. So all of those 4 priorities are about delivering the mission we've got. We've made good progress in revenue growth, 40% of our Mission 365 target already completed after 18 months. We're lagging a little bit behind in our net margin target. So the focus of those 4 priorities is really to continue to be on track to deliver the 8 to 10% net margin target that we have. And I expect good progress in 2026.
Okay, thanks, Alex. So current trading, so positive growth last year. No surprise it slowed a bit given the budget, etc. Would you just like to talk about the current trading?
Yeah, well, group revenue, excluding CTD, remains in growth over the last 9 weeks, with sales of 3.3% year on year, and TOPS Tiles is at 2% like for like. So sales were moderated slightly, maybe a bit of weaker consumer confidence prior to the budget, but we're in growth and we have tight control over the costs and delivery. The balance sheet remains strong. We've got our 30 million banking facility committed until October 2027, and we're confident of a further year of progress, both financially and strategically. And the business does remain on track to deliver Mission 365 in the medium term.
And the other announcement with the results was the acquisition of Fired Earth, what looks like quite a low valuation. So do you want to talk about what Fired Earth brings to the group?
Well, the deal includes the brand, the website and stock worth an approximate value of 2.5 million. So, we're very delighted with it. It's a highly respected brand, renowned for its premium design credentials. And it's a strong strategic fit for Topps because as a premium brand, it gives us access to a new customer group. It expands our addressable customer base, let's say. It strengthens our proposition to homeowners and to house builders and to all the trades, and also accelerates our digital penetration. So, I'm very excited to bring more details later in the year about what we intend to do with the brand itself and how the brand can add value to the Topps Group.
Okay. Well, Alex, it's great to meet you, and welcome to Topps Tiles, and we look forward to seeing how you progress over the next 6 to 12 months.
Thank you.
So let's have one final word from Rob. Rob, would you like to say something as we say goodbye to you from Topps Tiles?
So yeah, thanks, Russell. Look, I think a couple of final thoughts really from me. Firstly, 18 years is a long time with the same business, and it's been a wonderful business to be part of. And that's the reason I've stayed as long as I have. It's as simple as that. I've really, really enjoyed my time with the business, and I'm tremendously proud of everything we've achieved, particularly the last 6 years under my leadership as chief executive. I think we've really moved the business on as a group and really developed things. It's obviously great to be able to sign off, I think, with a really good set of final results. Actually, we've made, I think, really good strategic and financial progress. So that's very pleasing for me. And we've also managed to have a really good handover with Alex as our new incoming chief executive. Alex is obviously a highly capable and experienced leader, and I think also a really good cultural fit with the business, and that's really important for me personally. So that's great to see. And I wish Alex, the very best of luck with it all. I think she will do a brilliant job of leading the business on to the next stage of our journey. And I look forward to really seeing the progress that she can make with the business from the sidelines. Thank you.